Hello and welcome to Finextra. I'm Thea George and I'm here with Farooq Siddiqi from Standard Chartered. We're at Sibos 2017 in Toronto and we're talking about the digitalisation of trade. Farooq, thank you for joining me.
Thank you.
So can you tell me a bit about the current state of play with digitalisation in trade?
I think there are 4 or 5 areas where we see digitization happening. One is in the client space, around how clients are looking to connect. The second is around the internal bank space, how banks are looking to digitize their own internal process. The third is around business models, how banks are using things like data to drive more business. And finally, I would call it what is being led by the regulators in markets like Singapore and Hong Kong, where we see the regulators pushing for banks to digitize and to come onto platforms.
So we've been talking about digitalisation across banking for quite some time. What are the barriers to moving ahead with digitalisation in trade and how can we address them?
I think if you look at the barriers, I would break it up into 3 or 4 parts. One is around banks trying to understand what will it do for their business. So I think some of the drivers, some banks look at it from a cost perspective, some of them are looking at it from a perspective of how they will react to clients. Some of them see it as how do you react to new fintechs and other players who are increasingly eating their lunch. So part of it is in terms of barriers around denial. Some of it is absolutely cultural, that it's not going to happen tomorrow. Some of it is around, gee, I would love to do it, but I don't have the investment dollars to really commit to it now. So it's a combination of some of the stuff, but we do see banks taking baby steps forward.
So tell me then about the baby steps. Tell me about the progress that banks like Standard Chartered are making.
So if I first talk about the client, I think the first thing is clients' business models are evolving. A lot of them are becoming digital. So that means that they are looking for banks to interact with them digitally. So it's around how do you create that connectivity with banks and clients on a digital platform. The second thing is banks are looking at open-ended platforms. So they don't really want to connect with proprietary platforms anymore. They're looking at banks who can come in onto third-party platforms. So increasingly, we are seeing a lot of proliferation of third-party platforms, and as a bank, we are increasingly plugging into that. That's area number one. I think the second area, and actually there's a lot of interest on that, is around data. How we are using data to actually draw more insights, how to drive further business, how to rewrite our credit models based on looking at data, how we focus on things like fraud and money laundering using data. And I think you will see the whole data space expanding quite dramatically going forward. I think the third angle to this I will use is the word API. So we are seeing a lot of APIfication of platforms coming through, and increasingly that plays into the theme of connectivity. Then of course, everybody's favorite love or hate child, blockchain, DLT, call it what is it. So you're seeing various banks, including ourselves, looking at how does it solve for a real client problem. So we ourselves have done transactions with clients around them hosting the receivables on a platform which is blockchain enabled, and we've come in as a financing partner. So we'll clearly see that playing a big role. The last piece that I'll touch on is on things like robotics and artificial intelligence, which is something we are looking at using more in our back office to reduce the number of manual work we have and increasingly make our business much more digital.
Brilliant. I think you hit every single buzzword from Sibos in that answer, so that was very great. Many thanks indeed, Farooq.
Thank you very much. Thank you.
And thank you for watching.